Joining me now to discuss BTC price and other Bitcoin news is our week in review panel. We've got CoinDesk managing editor of technology, Christie Harkin in Toronto, and managing editor of markets, Keoun in Austin. Welcome, Brad and Christie. I love seeing your faces. It means we're at Friday.
It's Friday.
Happy Friday.
But not so good for those traders out there who are seeing a lot of, they're profit taking, but if they're not, it's looking pretty low. I'm taking a look at the traditional markets, you know, that the Dow is down 600 points following that job support. And we're seeing Bitcoin follow suit, down about 2.7% right now, Brad.
Yeah, you know, it's super interesting seeing that. I think it's kind of bullish for Bitcoin, probably. Bitcoin has been trading in sync with stocks and is, for most of this year has been trading like a global macro asset and a risky asset. So, you know, in this topsy-turvy world of financial markets, you know, good news is bad news. So good news is the job market's strong. Bad news is it still means there's some inflationary pressures. It means the Federal Reserve's going to have to keep tightening. So, we're seeing the stock market kind of fall out of bed here today on a Friday afternoon in October. And, Bitcoin's holding up all right. It was down, about 2% right when that report came out at 8:30 this morning. But that's about it. It's kind of stabilized, and it's kind of holding up here right around 19.4. I think it started the day at 20K, so it's not too bad.
Mm-hmm. And so some analysts are noticing that there's slight decoupling from traditional markets and maybe a correlation with gold that has increased. What's that all about?
Well, you know, Bitcoin is just this fascinating thing. If you go back the past few years and kind of see the way it's traded, and it kind of goes in and out of trading alongside other things. You know, it was trading alongside gold for a while, and then it was, people at one point people said it was totally uncorrelated with everything, and then it was correlated with stocks for most of this year. So people watch these correlations pretty closely. Jocelyn Young, one of our reporters, had a really good story out about this, and just showing this gold correlation starting to increase. One of the big firms, Keoun Research, flagged that as potentially, something to watch in the Bitcoin market. It's not, as her story pointed out, it's still a pretty weak correlation. I was just looking at the equities correlation, and that's still pretty strong with Bitcoin. So, I don't think we're seeing anything that we call a regime change just yet. Although, once again, today, here we have Bitcoin kind of doing its own thing. I mean, it's down, everything is down. But it's not crazy down like the stocks are today.
Yeah, we spoke with Bannockburn, Global Forex this morning. They were very unconvinced about this 30-day correlation with gold. They said, if you wait long enough, you can compare charts with something. You'll be able to compare something with everything. You'll be able to find similarities eventually. And so they weren't buying this argument. They are strongly of the opinion that Bitcoin is very much in correlation with the NASDAQ, with S&P 500, with the risk on assets. So there are many opinions out there, but
I think
Christie,
that's a fair criticism. Lawrence Lewitton,
he doesn't like it either.
he likes to focus on the 90-day correlation. And, to be honest, we were keying off Keoun Research's report. But yeah, you're right. A lot of people do like to look at longer time frames. So that is a fair criticism of this.
All right. So this, these lower prices for Bitcoin are doing nothing for miners out there who are struggling, dealing with, energy supply issues, as well as lowering the price of Bitcoin. And Argo is having to deal with those liquidity problems. Christie, what's happening with our poor miners out there?
Yeah, there are poor miners out there. So yes, there have been soaring energy prices. Add that to the plunge in the value of Bitcoin and other cryptocurrencies, and you've got a pretty tough scenario for the mining industry. As you mentioned, Argo Blockchain raised $27 million after agreeing to issue 87 million shares to a sole investor. It also announced the sale of 3,400 Antminer Pro miners, SJ19s, to a third party for $7 million. It's trying to find money, and its shares are down something like 15% on the London Stock Exchange.
And now it's 27%.
Is it 27 now? My goodness. So yeah, it's moving.
Tanking.
Compute North, as we know, filed for bankruptcy last month because of the bear market and supply issues and lending issues. And then we had Marathon Digital, one of the largest miners, and one of Compute North's largest customers, where it keeps its heavy-duty miners. It has now invested $10 million in convertible preferred stock and $21.3 million in an unsecured senior promissory note in different entities within the center. It has lots of things tied up in Compute, so it has that to deal with. Its shares have fallen a huge chunk. I'm seeing 61%. Maybe that's changed too. But then here's the thing. These miners are also building where they can. So they're looking at this bear market in some instances as an opportunity. And that is where we find our sister companies, Grayscale and Foundry, working together. Grayscale is now using the bear market as a way to launch a new investment vehicle that's going to help investors take advantage of the low prices in Bitcoin mining infrastructure. So the strategy is to take advantage of the bear market as an opportunity to build and actually deploy capital into the mining sector as it is struggling. And one of the things that it's going to be doing is partnering with Foundry to support its day-by-day operations and help Foundry to actually grow a bit more during this downtime. And if we go to the other side of the ocean, meanwhile, in Europe, they are looking at a whole other scenario. Well, it's kind of the same scenario. They're having trouble getting energy at a reasonable rate. And don't forget that when we talk about Bitcoin mining using a lot of energy, they don't do it for funsies. They're doing it for money, for profit, and they have to pay high energy prices. And right now, when you consider that natural gas is at a premium thanks to the war in Ukraine and Russian sanctions and just not having access to cheap energy that way, what are we finding? They're trying to find alternative energy sources, and where they're finding that is in the north part of Europe. We're looking at northern Norway and Sweden, where energy is 10 times cheaper than the cost in the southern parts of Europe. So there's now relocation happening again. And what kind of energy is that? Mostly hydroelectric. It's been kind of a perfect storm of bad energy situations in Europe. So you've got as I said, the natural gas being cut off or being way too expensive. Coal plants have been shut down recently, and nuclear power plants, something like 32 out of 56 reactors are offline for maintaining repairs. And so they're really struggling to find it, but they are going to where the energy is cheaper. And where's the energy cheaper? Where it's renewable. And that is going to make for an interesting dynamic. So yeah, that's what seems to be the story right now.
Look at the mining picture right now.
All kinds of new scenarios.
All right. And you also have one more for us too. There's some whispers of another Mt. Gox letter out there that might offer more hints as to whether or not creditors might get their repayment soon. What's going on there?
I'm parsing it a little bit because there is quite a bit of jargon going on. But what we're seeing is that on January 10th, there are going to be some payouts potentially. Well, there is going to be a registration period where you have to fill in all of your banking information, where you want your money to go to, what your choices are in terms of your mix, whether you want it all in cash or if you want some of it in the allowable portion of cryptocurrencies. And I believe the deadline for that, for letting them know how you want it, what you want, how you want it, is now January 10th. There is also a date in July by which some payouts will have to be made. There's a committed deadline for payouts. So we're going to start seeing money flowing in the first half of next year. And that seems to be what the takeaway is from the Mt. Gox letter, although there's still some finessing of the language that I want to pay more attention to before I'm definitive about it. So that's something I'm looking forward to really diving into and seeing how that's going to work.
Mt. Gox update.